What is going on, everyone? My name is Lewis, and I'm going to check this very quickly, make sure that the volume is all good. So give me 1 second here. On everyone, my name is Lewis, and yep, looks to be good to me. Awesome. So this is going to be episode 1 of a series that I want to do called, as you see in the title, Mastering or Developing, Creating, Making, Building a Master Indicator. Now, this is actually something that I have been doing and building for years now, not just like a few weeks, a few months, a year or two. Like, this has literally been years and years and years. I have been creating something like this and working on it. And there has been iteration after iteration. And now, with the advancements in AI, I plan on creating a fully working product for for people if they want to try it out. And so I'll just give a little bit of an introduction in case you guys don't know. First off, I'm in South Florida, beautiful South Florida. Obviously, as you can see the beach behind me. But this is all seriousness. So I will put on the charts. I will put on the charts. And yeah, essentially the thing is that a lot of times people they lose in crypto because they pick the wrong coins, right? Um, but also a lot of times people lose in crypto not necessarily because they choose the wrong coins, but because they have no idea where we are in the cycle, right? And they'll buy when everything feels great. And then they'll sell when everything really just feels terrible. And that's why I want to build a tool that helps you automate and basically take out a lot of the emotions in the trading, in the investing, because that is what really basically makes a lot of people mess up, right? It's those emotions. And this master indicator thing that I'm building, right? Um, like I mentioned, I've been building it for years now, and now I'm basically starting over from scratch using all the ideas, but I'm building it with AI. I actually use this. I actually used this exact frame, this exact mindset, this exact type of analysis to sell all of my crypto. Literally 100% of my crypto. I sold it right uh it's somewhere in September. So I don't know if that's no, that's August. So right here, yes, pretty much somewhere right here. Okay. Now I did end up buying back. So I'm not perfect. I'm not perfect, but I did sell all of it right here initially. And this was actually, if you go to the Coin Bureau page, you will see my very first live stream, maybe my second live stream. I think it was my first though. That's when I came on and I was like, guys, this is the worst possible chart you could possibly have. Like, sell everything right now, and it's really bad. And I can't tell you how much hate I got for that. It was so much hate, so much hate. But yeah, the things that I'm going to be sharing in this series are what actually like told me, hey, look, that was a really good time to sell, right? And hopefully we can have it be the best time to buy, right? And honestly, looking at this right now, it is a good time to buy, or this is pretty bullish. All of this right here, what's happening right now. So I do expect a move up. I would say that we're more likely to see a move up rather than a move down right now, just because of this pattern formation. But we're not going to be talking about patterns right now. What we're going to be talking about is time frames and market cycles. And the reason we want to do that, the reason I'm starting with this is because the difference between someone who bought BTC at 15K in November of 2022 versus 126K in October of 2025, is vastly different, but it's the same exact asset. It's just a difference of timing. It's just a timing issue, right? Most people, they don't have a system, and so if you actually understand market cycles and you have a system that works with them, then it could help potentially prevent you from buying at the top of the cycle, right? And now the goal, I mean, honestly, the goal sort of is to buy the exact top and bottom. That is really the goal. But if we could aim for trying to buy the exact bottom and sell the exact top, then that would be amazing if we could do that. So we'll aim for that. And if you could get within 10 to maybe, let's say, 15% of that, then you are amazing. You're probably in the top 1% of all traders who trade cryptocurrencies, or really anything for that matter. So one thing that I will start off saying is this. It's like, okay, you might think like you want to sell the top, like your portfolio reaches, multiple six figures or multiple seven figures, like right here, right? And then your portfolio starts going down. Okay. And you might be upset at yourself. But a big thing that I want to say is that you're not going to sell the exact top, right? So psychologically, something that helped me tremendously is if you just think, okay, look, here's the market cycle, right? So if you could sell within the top 15, 20%, I mean, you're literally selling above 100K if you did that, right? So and obviously this is Bitcoin. Bitcoin doesn't go down as much as the altcoins, right? So if you're an altcoin, I don't know, let's put I'll just do Solana because like why not, right? So if you do Solana, then you go over to Solana. Let me get rid of all this stuff. I'll also get rid of these and I'll get rid of this right here as well. Okay. So if you bought Solana, let's say you bought Solana somewhere over here around $25, and then, let's say right here at the peak at $295, your portfolio is, $1 million or a few million bucks. And then you end up selling it like, I don't know, at $200 or something like that, and now it's like 800,000. I know I'm just pulling numbers, right? But like, let's say you do that. That's still significantly better than waiting, and not knowing what to do, and then, selling it right here at 90 bucks, when your portfolio is down tremendously, and um, you're down 50% or 70% from the top. And that's what most people do. Most people sell like when it's down that much. So this master indicator is what I'm building to help prevent people from holding so much all the way down. And it's also going to be used to help buy the bottom, because most people, they buy, somewhere within this region, if not all the way up to here, like basically this region. This is where most people buy. But if you could get an indicator, a master indicator that teaches you to buy somewhere down here, or triggers, somewhere down here, obviously that would be amazing, right? So that's what we're going to talk about right now. We're going to talk about the timing of the cycles, and basically go through, see how long one current market cycle takes, and go from bottom to top, top to bottom, top to top, bottom to bottom, et cetera, et cetera. We'll do that for Bitcoin. We'll do that for Ethereum. And I guess we could also do it for Solana. Might as well, right? So first off, though, before we even get into that, I think it's better to have a huge overview of what market cycles do. And we could literally just talk about it. There's four different parts to a market cycle: accumulation, markup, distribution, and markdown. So I'm going to write that in here. Where is this? And you know what? Let me go back to BTC actually. And I'll do all-time history for it, and I'll go create this, and I'll paste this in. So these are the 4 levels of the 4 phases of a market cycle, okay? Accumulation, markup, distribution, and markdown. They're pretty self-explanatory, but pretty much where's my little thing, my little drawing tool? We have the accumulation, that's down here. Let me get this out of the way. That's down here. That's even you could say that's here. That's right here. Accumulation, accumulation, accumulation. Just list. Obviously, that's pretty much the bottom. Then we have the markup. So the markup. This is the markup right here. Um, really, honestly, the markup is more like from here up to around here, this area. And for the last cycle, you could say the markup was from, let's say, 15,000 up to around 80, let's say like 80 to 90,000 or 80 to 100,000. And that's the markup phase. So we'll just say like this is accumulation, accumulation, accumulation. Okay, and then this is like markup. Okay, this is markup. Okay, and then we have the distribution phase. So 2 cycles ago, the distribution phase was right here. It was basically from 35,000 up to 70,000 or 69,000. The distribution phase for last cycle was pretty much around 80K to 120, to the top, basically up here. This was distribution, and now we're in the markdown cycle. So this is a D for distribution, D for distribution, okay, and this is MMD, okay, and I'll say marked up was MU, and this is right here MD, okay, marked down, right? This is super simple stuff, but like this is what you need to know, and just like have in your head and have a good understanding of the markets in case if you want to trade it, if you want to be an effective trader, right? Like this is the first thing that you should probably learn, to be honest, is market cycles. There's a great book. I've read it multiple times. Books, I'll look it up. Books on market cycles. I believe it was by Howard Marks, but it was called Mastering the Market Cycle. So let me share this. Let me share this with you right now. Here it is, Mastering the Market Cycle. This book is absolutely a must read, in my opinion. Yeah, I highly recommend it. So yeah, it teaches all about this, plus a whole lot more. So now you have like a big general overview of the market cycles. Okay, when it comes to crypto, specifically crypto, what happens is Bitcoin tends to lead the cycle. So Bitcoin tends to lead first, okay? And then after Bitcoin leads, then typically Ethereum and large caps happen, and then eventually alts explode, and then there's euphoria, and then there's the collapse back into Bitcoin and stables. So if we look at the 2021 cycle, BTC dominance was all the way. Let me go over here and I'll look up BTC dominance, and yeah, we have BTC dominance 2021. And when did basically the cycle start? The cycle started right here. Like this is when euphoria happened. Like from here to here. This was like euphoria, right? So Bitcoin dominance goes up, and then when Bitcoin dominance, starts to fall, that's typically when alts, start to go crazy, right? And pretty much in 2025, in 2024 and 2025, BTC dominance rose the entire way, almost the entire way, and then where is it? It was 2024, right around here, like this right here, it's actually if you I should zoom in a little bit more. This right here, this was quote unquote alt season, right? And then we had another little mini alt season, uh, basically right around. And so typically you want to see like Bitcoin dominance, reaching a big resistance and then uh, falling, and then that's typically when alt season happens, right? But before you even get into the dominance levels and before you even get into even thinking of, is it Ethereum, is it altcoins, is it like what specific altcoins, all of that stuff, you should really think about where we are in the market cycle to begin with. So that's what you start out with first is, and I'll go back to BTC, right? So the first thing is where we are at. Let me get this out of here, and I'll put this here. I'll say first first thing. Where are we in the market cycle? And the reason why this needs to come first is because it's like it's like this will determine how much risk you're going to put on. This is going to determine pretty much everything, because if we're here, let's say like we're here, then you want to be putting on as much risk as possible, right? When we're here, even back here, to be honest, even when we're back here, it's like if you're a long-term investor, this is where you want to be putting on the most amount of risk, quote unquote. But it's really I don't even like saying that, because if you know what you're doing, you're actually putting on a lot less risk down here. The risk increases as the price increases, right? The risk increases as the price increases. So most people have it backwards. Most people have it totally backwards. And they think, oh, look, Bitcoin's at $68,000, like, after this big rally. And they're like, now it's less risky. That's what they say. That's what they think. Most people, they don't know what they're doing. A bunch of idiots. They're like, oh, it's less risky. So I'm gonna buy it now. And then it keeps on going up because we're in the middle of the bull market here. And they're like, look at me. I'm so smart. But you know when it was the least riskiest? It was the least riskiest when it was down here, between 15 and 27, $30,000. That's when it was the least riskiest. So you have to like switch your mindset from thinking that as things are going up, like from a market cycle standpoint, as things are going up, it becomes like a better buy and less risky. No, switch it so that you think as things are going down, if you know what you're doing, if you're investing into good assets, fundamentally sound assets, it becomes less risky as it goes down. And you should potentially, I'm not saying you should be buying more, but people say that you should be buying more. I'm going to be buying more. That's all I'm saying, right? And so that's number one. That's number one. Where are we in the market cycle? All right. Uh, uh, Let me also, I guess, another thing actually is to that you should totally be aware of, um, is the psychology of the market cycle chart, right? Actually, and I'm pretty sure I could probably just copy and paste it onto the chart. So let me see if I could do this. Let me click copy and paste. So give me 1 second here. As long as it downloads, whatever. I'm just gonna copy image, and then I will see if I could paste it in here by clicking this. Yes. Okay, cool. So now we have this. So this is don't mind these arrows and this graph, right? But this is the other thing that you definitely need to be aware of. This is the very first thing that you need to be aware of, along with where we are in the market cycle. This is part of that process. This is part of asking yourself, where are we in the market cycle, right? Because every market cycle goes through these phases, okay? And this was actually how I was able to, catch Solana at like 20 bucks or 25 bucks or something like that. Is because like I saw this and I was like, this is so obvious. It's so obvious. There's also how I got into Bitcoin. Like I threw everything into Bitcoin, and other coins, at like 20,000 bucks, 25,000 bucks, 30,000 bucks, because I studied this chart so much. And obviously I read that book, Mastering the Market Cycles. And I was here in 2017. So I went through this entire thing and I knew like, okay, like I learned from my experience back then. So I knew like, okay, when it reached here, I need to be buying, right? So there's like a whole bunch of stuff, but like this stuff that I'm saying right now, this is what enabled me to, make enough money to buy an apartment, in Miami. Like it's this stuff that I studied and studied and studied, right, over and over and over again. So you have the time and you have the Wall Street cheat sheet, psychology of a market cycle chart. And that's I mean, just look at it. Let's just look at this chart. What we'll do is we'll go to 2021 because that's probably a better, that actually totally panned out. And it's like we'll go to the weekly chart as well because it makes more sense this way. But look at this. Look at this chart. The actual chart of Bitcoin, right? And then what actually happened. Like it's almost it's almost exactly the same. Like it's actually crazy. It's actually crazy how close it is. So you have the peak euphoria, complacency bounce, anxiety, denial, panic, capitulation, and then I guess the anger is down here, right? And it didn't even last as long as what this chart looks like. Crypto is in super hyperdrive, right? So it's like this happens over and over and over and over again. So always, always, always have this in your mind. This is the first thing to think about when studying charts and thinking about, should I invest? Look at the AI bubble. Look at AI, right? Look at the stock market. What's happening with that? Like, where do you think we are in the stock market with this on compared to this, right? You could use it for anything. It's not just Bitcoin. It's not just stocks. It's Solana. Same exact thing. Euphoria, complacency bounce, anger, denial, anger, capitulation. Boom, boom, boom. It's like the same thing. So yeah, that's the first thing that I always think of is where are we on that chart? And along with that, where are we in the market cycle? So let's just do some maths. Let's just do a little bit of maths and figure some stuff out. Okay, let's do it. We're going to start with Bitcoin, and then we're going to do Ethereum, and then I guess we'll do Solana as well. And then I'll talk a little bit about a few other things. So if we look at Bitcoin, let me just make sure this is correct. Yeah, okay. So if we look at Bitcoin, what do we have here? We have the first market cycle, 2013 to 2014, 2015, right? So we could start. Wow, look, it's just so crazy. So great. Look at how crazy it was from 13 to like insane, insane. And you know what's crazy is that back here in 2013, like, you look at this and you're like, this is absolutely insane, right? Like this is what it looked like at the time, right? This is what it looked like at the time. And then you're like, oh, it's never going to happen again. It went up like, 2000% from here. And then, and then you just zoom out And it literally like, it becomes a little blimp on the freaking radar. It becomes a blimp on the chart, like a tiny, tiny, tiny thing, and that's what this one eventually became as well, right? This looks so big, and then you look over here, it's like, "Oh my god, look at this." Ah, right? I just always find that so crazy. So, anyway, let's take a look at this. Let's take a look at this. We have the top of the 2013 cycle, and we'll just go from the top. Um, I don't even know if you honestly should start from 2013. It's probably best to start from 2017, but I'll start from 2013 just to like do it. And we'll do top to top, okay? So let's try that out. Top to top, even though you could honestly probably just put this into ChatGPT and see, or into Claude or something. So what I'm gonna do, I'm just gonna type it in Claude. I'm gonna see, and I'm also going to just manually do it right now. I'm gonna say, Claude, give me the number of days that it took for Bitcoin to go from top to top in for each of its market cycles. And we'll see. So I just typed that into Claude, and we'll see if it gives the same, the same outcome. But I'm gonna put it in here. I'm gonna say cycle top to top. And I'll say 2013 to 2017 equals 1477 days. Okay. So that's 2013 to 2017. Then we have this right here. This is 2017 top, 2017 top, sorry, the 2021 top, 1,428 days. So 2017 to 2021 equals 1,428 days. Okay. Now let's do 2021 to 2024, sorry, 2025, 1,428. Let's see, 2021 to 2025 equals 1,428. Now, I hope that you can see just from our very, very first, markings on this analysis, why this can be so useful. Look at the number of days that it took to go from the top to the top in 2017 to 2021, last 2 cycles ago, and look at the number of days it took to go from the top from 2021 to 2025. Same exact amount of days, okay? So, I'm not saying, like, this is the only thing that you need to do, like, just look at the number of days, like, and that's it. But obviously, obviously, it's relevant, right? Obviously. And so let me, yeah, that's it. Yeah, so I'm going to do copy and paste what what Claude says, and give me 1 second here. All right, let me go this and let me paste this. Hopefully I can paste it in here. Um, okay, so this is what happened. This was what happened with Claude. But yeah, 1,424 days, 1,426 days, right? So pretty dang close. The pattern is remarkably consistent. Cycles 2 to 3 and 3 to 4 are almost identical, while cycles 1 to 2 is slightly longer. The average top-to-top duration across all three periods is 1,443 days, approximately 3 years and 11 months. So that is the first. That's the first thing that I wanted to go through. I just wish that maybe I could copy and paste this into here. Let me see. Oh, sweet. I can. Okay. So that is number one. Now let's what I'm going to do real quick, I'm going to type in, okay, that's great. Okay. That's great. Now share with me the number of days that it took for Bitcoin to go from bottom to bottom for each of its market cycles. All right. So we'll see what Claude has to say about that. And in the meantime, I'll visually show you on the charts. So the 20, let's actually go back to the 2015, cycle back here. This was the top, this was the bottom. So where's the bottom? We did top to top. Now let's do bottom to bottom. This was the bottom of the cycle right there, August 10th. Excuse me. And then where was the bottom of the next cycle? Right there. So at December 10th, 2018, 1,211 days. All right, so let's put that in here. We have cycle top to top, and then we have cycle bottom to bottom, and we have 2013 to 2017 equals 1,211 days. Okay. Now let's do the next cycle. Okay, so we have the bottom right here. All right. And then let's keep on going. Where is the bottom? Well, the bottom is right there. So let's see. Let's see. How much was the bottom to bottom? This one was 1,442 days. So 2017 to 2022. Yeah, it was November 2022 equals 1,442 days. All right. What's going on, Alan? And yes, Bob. I hope that's your name. 4-year cycle, definitely still intact. Definitely still intact. I'm so happy that I freaking, used it for my analysis, because that was pretty crazy how accurate it was. But yeah, so this is this right there. We got that. That's 1,442 days. And then we're not, I don't think that we're at the bottom yet, even though I do think we're going to see move up. I'm not sure that we're at the bottom, but let's say that, say that we were, then that would be somewhere around, September-ish, October-ish, maybe of this year. So let's go back to Claude and read what it says, and I'll share my Claude. Make sure that this is good. Yeah. Okay. So here I am in Claude, and pretty much here's the Bitcoin cycle bottom to bottom numbers. Bottom one was in 2011, bottom two, 2015, bottom three, 2018, bottom four, 2022. All right, bottom to bottom duration. Bottoms 1 to 2 lasted 1,153 days. Bottoms 2 to 3, 1,431 days. Bottoms 3 to 4, 1,437 days. Is that correct? Yeah, I guess so. I'm using the weekly chart, but this is using the daily chart, so that's probably more accurate. Let me double double. I had, why did I have 2013 to 2017 as that? Let me go. Oh, okay, okay. So they did 2015. I see, I see. Let's go back. Let's go back over here. Go to 2015. All right. So I put the market cycle bottom as here, August August 17th. Where did they put it? They put it um January 14th is when at 2015. So they put it June, January 14th. That's not, wait, 2015. There you go. December 2015. They put it here. Oh, I see. I see what happened here. Is this correct? Oh, yeah. Okay. Let's go to the daily chart and double check this real quick because this could be. I do see the case for January for for this being the bottom, and then this being like a flash crash type of deal. Same thing like March. I mean, technically this was sort of technically this was the bottom, but like if you're actually looking at the actual chart like this and looking at it in a slightly different view, then this was the bottom. And then if this was the bottom, this was just like a quick flash crash. You know, it lasted 1 day. Um, and then immediately rocketed up. So this was basically a liquidity grab. This was literally a liquidity grab. You could see they went right under the wick, and that was the low, and then it shot up. But if you count this, let's say you count this as the low, okay, instead of this as the low. If you count that as the low, then it's actually, if we zoom it out over here and go over here, then it's actually 1,431 days, 1,431 days. And let's just say that that's the case. So 1,431 days, 1,431 days, 1,000, and wow. I mean, I gotta say, I have to say that that's the bottom, because if you just look at, let me just look at this. We have the top to top, so close in numbers. And then we have the bottom to bottom. Eric, by the way, I'm getting to that. Then we have the bottom to bottom, 1431, 1442. So let's go back over here. Well, actually, I'm gonna copy and paste what this says over here in Claude. All right, copy, or I'm gonna make a thing, and then I'm gonna put that in here. I'll share this tab, and then I will copy image. Okay, and I will paste this image into here by clicking paste. And now we have the bottom to bottom. So we have the top to top. Look at the bottom to bottom. Cycle bottom to bottoms. 1431, 1437, similar to the top to top data, bottoms 2 to 3 and 3 to 4 are nearly identical at around 1,434 days. Okay, 1,434 days. The first cycle was shorter since Bitcoin was still in its infancy. Side-by-side comparison, top to top, bottom to bottom. We have the top to top. Yeah, I mean, these are just the comparisons. The consistencies in the last two cycles is striking. Both tops and bottoms are landing within a few days of each other, cycle over cycle. That's powerful data for this episode, for this argument, which is the argument that I'm making, is that market cycles are real and they're measurable. And if you were intelligent, you would use them in your analysis. So given that that's the case, let's look at where the market cycle, bottomed in 2022, right here, November 2022, right? So we have this, This was November 21st, somewhere around right here. Let me get that. All right, we got that right there. So that was the bottom. So 1,400 and let's say uh 34 days as the average, 1,434, 1,434. That puts us at October 25th, 2026. All right. So this is the average bottom to bottom. And let me get something like this and put it right here. October, when is this? This is October 23rd. Is that what I did? October 25th. Okay. So I'll say this as October 25th, and I'll say bottom to bottom, bottom to bottom average. Okay. So knowing the bottom to bottom average, uh, yeah. What do you think when do you think would be a really good idea to potentially buy as much Bitcoin as humanly possible? Maybe October 25th, 2026? Dude, I'm telling you right now, I'm going to take out a mortgage on my condo and probably sell everything that I own and buy and take out loan. I'm gonna do a lot of irresponsible stuff if Bitcoin is down. The only the only thing is that at this there is the possibility of BlackRock and some entities pushing Bitcoin down and extending the bear market. I don't think this will happen. I do not think that this will happen, but there is the possibility of of it happening is that these big entities will drive the price down and then hold it there so that MicroStrategy eventually has to repay its loans or something and because they probably know if we're being real here, if Bitcoin goes to 20,000 again and it just stays there, MicroStrategy, technically speaking, they can hold Bitcoin and not have to liquidate their position for over 1 year. Bitcoin could fall to under $10,000. It could be in the single digits, and they could hold it for an entire year and not have to liquidate anything. But let's be real here. If Bitcoin goes to even 20,000 and it's there for 6 months, they're probably going to get pressure. They're probably going to have enough pressure to to sell, right? Like people are going to want to sell. I don't know how much weight Michael Saylor has, but I don't believe he has 100% of the weight of the company and the ability to hold it, right? So, saying that, it, you know, be responsible. Yeah, exactly. Um, so yeah, that's where the average will be according to this bottom to bottom. Um, Let me also check some other thing. The other thing, the top to top, the average was 1,425 days. So if we do that, if we take 1,425, might as well do that as well, top to top, right? 1,425. That puts us at the next cycle. It's actually too far ahead using, yeah, it's not even, you can't even do it. Okay. August 2029. That's where the next cycle top will most likely be, August 29th. Which is different. All right. So I'll put I'll make this red. Average top to top. Actually, I'm gonna make this will be white, but the actual thing will be red. Okay. Average top. Okay. So far we have top to top, we have bottom to bottom. Now let's do top to bottom. Okay. Let's do cycle top to bottom. All right. And once again, I will put it into Claude. I'll say, now share the number of days that it took for Bitcoin to go from top to bottom for each of its market cycles. Okay, so I just typed that into Claude, and we will see what Claude says in a minute. And while we're doing that, we might as well continue the process and do top to bottom of all of the cycles. So let me go back here so you can visually see it, and you'll visually see what I'm talking about over here. So the first cycle, we have the top. Hold on a second. Let me just double check this real quick. Got to make sure it's correct. Reset. Go left, go left, go left. Here we are. So what was the day? What was the top? This was the top. So the first cycle, we have that to, let's keep it going, keep it moving to the bottom right around here. All right, so that was 406 days, top to bottom. So let's put that in the thing, in our little, where is it? All right, 2013 to 2017. So we have 2013 to 2017 equals, what was it, 413 days? Was that it? 406 days, sorry, 406, oh my gosh, 406 days. All right, so that's number one. And then let's look at number two right here. We zoom in. So you can see what I'm doing over here, 406. Next one was 364 days. Actually, I already know this. 364 days for all of them, for both of them. All right, so 2017 to, let's just keep it simple and say 2022. Was it? No, to 2018. Whatever. It's 364 days. It's fine. All right, and then finally we have the 2021 to 2025 equals, why is this 2022? This should be 2021. Actually, you know what? I feel like I want to be more accurate with this. Top to bottom, it was 2018, and this was 2013 to 2015. Let's be real here. And this was 2021 to 2022, right? And that was also, I already know, it was 364 days. All right, so and we'll, I'll show you it, just to show you it, right? Show you, in case you're unaware of this. Top right here, bottom right here. Oh, 376 days. This was actually longer. Man, how is that possible? Oh, it was. How is that possible? It was November. It's November to November. 364. Oh, well, 364 days was here, right? That was the, wait a minute. Did I get that right? Okay, so technically technically, it was 376 days. But I mean, dude, you do 364, do 376, same thing, right? So I'll just say three. I'll put 376. You know, I'll put 376 just because. So we have 376. 376. Okay. Now, also let's look at Claude over here. Um, so for the top to bottom, using the dates we already have, um, top to bottom, 13 to 15, 17 to 18, 21 to 22. Okay. The bear market phase, top to bottom, is remarkably consistent at roughly 1 year, ranging from 363 to 410 days. Meanwhile, the drawdown severity has been decreasing each cycle, negative 87%, negative 84%, negative 77%, which reflects market maturation and increasing market capitalization. If the current cycle follows the same pattern, the bottom would land somewhere around October to November 2026, roughly 1 year after the October 2025 top. Here's the full picture for your episode, which is what I'm doing right now. Top to top, bottom to bottom, top to bottom, and then max drawdown. So we have the max drawdown. So I'm going to copy this. Okay. And then we'll paste this. This is a clean, compelling data set. The cycles are almost rhythmic. 4 years peak to peak, around 1 year for the crash, and then around 2.5 to 3 years for recovery into the next bull run. All right. So this is the data right here. We have the data right here. Home slides. What's good, brother? Basically what I'm doing is I am creating a master indicator that will use multiple metrics and have multiple metrics on the screen and in the data dashboard. And it will basically help show people when the top is in, when the bottom is in, things like that. It's what helped me, call the top. I called the exact top in 2021. I called the top in 2025. And these are the metrics that I used. And right now I'm going over the first thing, which is the understanding market cycles. And that's what I'm doing right now. We're just going over them. So let me finish doing this because this is what I'm trying to get done. Cycle bottoms, bottom. Hold on a second. Where did my thing go? I guess I didn't have it top to top measurements, top to top. Yeah. Okay. Let me copy this, copy image. Let me paste this into here. Paste. Okay. There you go. Copy image, max drawdown. Do I have a max drawdown on here? No, I don't. So let me paste this one in here. This is what I want. All right. So we have the data. Okay. So we have the data. This is pretty sick, to be honest. Yeah, so top to top. That's so cool. 1, 2, 3, 17, 42, 42. Yeah, that's very, yeah. Okay, great. All right. So now we have the cycle top to bottom. Now, what if we go into, how about, yeah, of course. I listen to Benjamin Cohen. You know what I'll talk about right now, or I'll mention to you guys is like, I've noticed that there's multiple different camps of there's multiple different camps of people. You have the people on the far left side. It's like the meme, the bell curve. So you have the people on the far left. These people are absolute degenerate idiots. But they make a lot of money. They make more money actually at the peak than any other people in crypto because they're so dumb that they put in everything they have into fart coin or into popcat or into something stupid that goes up 500x, and then they make all that money, but they never keep it. They never keep it. Okay, so you have these people. And then you have people who I believe, like Benjamin Cohen, falls into these people, like the very, very smart people on the right, who are like, Bitcoin is king. Have all your money or most 99% of your money in Bitcoin. Don't like get involved with alts. Look at the alt cycle charts, yada, yada, yada. It's like it's going down against Bitcoin. You'd be better off holding Bitcoin. All these alts, they just went down and they only went down, and that's it. And that's like Benjamin Cohen, right? And then I say, guys, you want to have a lot of you can have a bunch of your money in Bitcoin, sure. But there are periods of time where altcoins will outperform Bitcoin drastically, absolutely drastically. And so you want to be taking bets and putting money into these asymmetrical bets, these asymmetrical plays, to make drastically more than you would if you were just holding Bitcoin. Because yeah, you'll make some money holding Bitcoin, but you're not going to make life-changing wealth, right? You have to go all the way to the money, to the stuff that the people on the left of the bell curve are getting into. Okay, that's what's going to end up making you the most amount of money, because it's those things that end up going up 100x. And I've gotten at least 4, maybe 5, maybe 6 50x's. I got 5, maybe 6 50x's over the last 4 years. And my investment into Caspa that did 100x made up for everything that I lost in 2022. It made up for everything that I lost during the bear market. Okay, my investment into Kita in 2025, literally last year, 2025, I got into it at a $6 million market cap, and it ended up going up to either $2 or $6 billion. Okay, so you have to like, even, and I'm also KeyCat, PopCat, these meme coins. There are people that are like, don't invest in the meme coins. They're stupid. They're not, like, they're just meme coins. They're not going to do anything. But do you not understand what space we're in? Dogecoin did a 300x. Dogecoin outperformed Bitcoin. Dogecoin still outperformed Bitcoin. It's still. I'll show you something fucking crazy. Sorry for a second. I'll show you something crazy. Look at the Dogecoin against Bitcoin chart. People, they hate so much. But you know what? If you would have gotten into Dogecoin in 2019, in 2020, in 2019, if you would have gotten into Dogecoin anytime before 2021, except for at the peak of the market in 2017 or the peak of the market in 2014, guess what? You would have outperformed holding Bitcoin. 2019, 2020, 2021, 2022, 2023, 2024, 2025, almost you would, if you would have gotten to Dogecoin 7 years ago, you would still be up against Bitcoin. So look for these things. I don't think there's going to be anything else that necessarily, like altcoin, that really does that again. But it was the altcoin plays that I got into in 2025 and 2024 that fucking that crushed it. That absolutely crushed it. So it's like, when people are like, just go into Bitcoin, just buy Bitcoin and hold Bitcoin, it's like, no, like, if you know what you're doing, then find the plays that are actually going to make you a lot of money and then go into those. You know, it's just that most people are really stupid, and most people don't actually, you know, look for the plays. They don't know how to put two and two together and come up with the coin and see the coins that are actually have potential. You know, I'm sorry, dude. I like I said, I called like 5 or 6 of them. You know, that did 50x plus. So, you know, I had people that made like 80K on one trade. And then another 60K on another like starting out with like 5 grand, like 5 or 10 grand, like putting it into those, you know. So like this is what I'm saying. Don't listen. I mean, listen to whoever you want to listen to. Everyone has their own risk tolerance, right? But like what I'm saying, if you have a, let's say, $100,000, right? Yeah, you could put that all into Bitcoin, or you could put it into Bitcoin, and then when you see the plays that have the potential, take 5% and put it into those. 5%, 5%, 5%, 5%, 5%, 5%. Maybe 3 or 4 of them go to zero. And then you have one of them that does a 20x or 30x. That's how I trade. That's how I trade. Okay. And it worked out really well, really well. So that's the difference, I think, between me and a lot of other traders, a lot of other analysts, a lot of other YouTubers. You know, I'm doing this now with Coin Bureau because I love the Coin Bureau because they've always been super honest and transparent, and they have, you know, I've watched them for years and years, since 2017, basically 2017, 2018. And it's like I wanted to bring a new perspective, so I'm super happy that they have let me, you know, come on with this, because I just don't see a lot of people. I see so many influencers. Like I'm not like an influencer, you know, but this is helping. This is helping, of course, but like I'm a trader. Like I've made my money trading, right? And it's like now I can actually share like my experiences through like and help you guys out, like even more so. I have my own channel and stuff where I share a lot of things as well, but this is cool because it's helping me get to a bigger audience, right? And so that's what I'm doing right now. It's like I'm creating this master indicator, and I'm showing you guys like, okay, like this is what I'm doing, right? This is how I'm creating this and analyzing the markets and stuff, right? So eventually this indicator is going to be just absolutely mind-blowing. It's going to be a huge data analytical program, software. You know, it's going to have thousands of people that could sign up for it, and that use it. And this is just the first indicator. This is how I'm using it, you know, how I'm building it out. And so yeah, let's keep on going. Let's keep on going. Now that I got out of that rant over there, right? Just type my name in, Lewis Raskin. I'll just put like just YouTube, Lewis Raskin. Actually, you know what? Maybe I could. I don't know if I could. Maybe I could just put it in the actual, chat or whatever. But yeah, like let me see if I could do that real quick. I'll throw it in the chat. Might as well. Copy, and then I'll paste it here. Hopefully, y'all could see. Y'all could see that. Yeah, that would be it. Please subscribe also, because I've put a lot of effort into my channel. Like some of these videos literally have taken me like dozens of out, like 50 hours to make a video. Like the video that I'm coming out with soon, I actually started creating it last year, and it basically goes into what I just ranted about, like for like hours and hours and hours. It's like a full-on in-depth like course essentially on how I traded crypto and how I was successful with it. And it took me like 15 hours to film, and it took my editor like 2 months, and he's still not even done yet. And but it's going to be absolutely sick. It's the best. It's going to be so good. So yeah, look out for that. That's going to be awesome. But yeah, so back to this master indicator thing because I don't want this to take up a crazy long. I want to be able to continue to build this even after I end the stream. Let's move on and do the cycle. Go back over here and look at the cycle. Uh, let's see, we got the top to top, bottom to bottom, top to bottom, and now let's do the cycle bottom to top. Okay, let's do the cycle bottom to top. And what I'm going to do is I'm going to put that into Claude, and we're going to see. Yeah, I'm going to say yes. Add the bottom to top durations as well. Right. So as I wait for Claude to get the bottom to top, let's take a look at these. Where is it? Here it is. All right, so bottom to top. Let me make sure I'm still on the right. Yes, okay, cool. Still on the right thing. Appreciate that, Eric. Appreciate that, Bob Saget. Bob Saget is actually hilarious. He's so funny. So yeah, let's do the bottom to top, and I'll just do that here. Bottom, top, right. Yeah. Here we go. So this right here, as you can see, is 1,065. Yeah, 1,065. A little bit more. Come on. You can do it. You can do it. I know you can do it. Let's go. There you go. 1,067. 1,067 days. All right. So let's do this. 2015 to 2017. 1,057 days. All right. And then we have 67. Sorry, it was 67 days, not 57. All right, then we got the cycle bottom to top over here. Where is it? Basically here. All right, looks like that was the bottom to the top. 1,061 days. Yeah, 1,061. Looks about right. All right, so that was 2017, 2018 to 2021. It was 1,061 days. All right, and then the next one, bottom to top. Bottom to top. Let me just get through this one. Top 1,000. All right. Yeah, 1,062 days. That's what it looks like to me. So 2022, 2025 equals 1,062 days. Well. Look at that. Look at that. 1,067 days, 1,061 days, 1,062 days. And you wonder why I was bearish in September and October. You wonder why people were bearish at that time. Look at that. Look at that. Are you kidding me? Are you kidding me? Let's go into Claude. See what we got here. All right. So we have all of the dates, bottom to top, around 1,108 days. For the first cycle, for the cycle 2 to 3, it was 1,068 days. Cycle 3 to 4, 1,061 days. Cycle 4 to 5, 1,049 days. All right, here's the complete cycle data for episode 1, which is what we have right here. and I will copy and paste this right here. Also, it is saying that the bull run is getting slightly shorter each cycle. Um, it's compressing, but only by around 20 days per cycle. It still consistently is around 3 years from bottom to top. The returns are diminishing significantly each cycle, from 54,000% down to 713%. This is important for your audience to understand. The opportunity is still massive, but expecting a 2013 style 2026 is real. It's unrealistic, right? The market is maturing. Also, the crash phase, which is around 1 year, plus the recovery phase around 3 years, adds up to the 4 year cycle. And this has held across every single cycle in Bitcoin's history. All right. So, like, this is super, super, super important to understand. Hence why we are doing it in episode 1. All right. So we got copy. Let's do this. And I'll put the image in here, copy image, paste image. So now we have the whole picture. Okay. So, all right, now you have the whole picture, um, and that's pretty much it. I gotta say, I think that's yeah. I mean, we got it down. I, max drawdown. We got the max drawdown here. It's the same. Uh, why is cycle 4? Oh, I see. Cycle 1, cycle 2, cycle 3, average. Cycle 1, cycle 4, average 83, 83. I'm just making sure this is correct, right? Um, boom, 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 boom. Yes, yes, yes. And then we have, yeah, all right. So we have some really good information right here. Knowing this information, let's just look at the top to bottom, the crash, around 383 days, 383 days. So let's see here. What would be 383 days from the top in October? 383 days would be, it would be literally the, okay. Look at this. Look at this. This right here is the bottom to bottom average and the top to bottom average. If that's not enough to want to just throw the boat in the kitchen sink when at this time in October, I don't know what is. I don't know what is. But like, I mean, look at that. It's both. It's both of them. How crazy is that? Right? How crazy is that? Now, what I want to do, I have no idea really. I don't really know what it's like for Ethereum. I just know what it's like for Bitcoin, and Bitcoin has been very helpful. However, um, Ethereum has also been extremely helpful in my analysis. To be honest, Ethereum is the reason why I sold back in September most of my crypto is because if you look right here, I'll share with this. This is going to be something else that I add to the master indicator. But if you get a weekly bearish market structure break, then that if you get a weekly bearish market structure break, that signifies the top. So basically, a bearish market structure break happens when we are in an uptrend, and then it makes a low, and it makes a higher low, and then it makes a lower low, right? It makes a lower low compared to it's. You can see higher lows, higher lows, higher lows, higher lows, higher lows, and then it makes a lower low. When this happens on the weekly time frame, then that's pretty much typically game over if it happens within the time period where the cycle should end. And look at what happened. Higher low, higher low, higher low, high, and then boom, right here. First lower low right there. Bearish market structure break, bearish market structure break on the weekly time frame, September 22nd, 2 weeks before the biggest crash in crypto history, right? Crazy. So if you can combine things, you could start combining things. That's called confluence. And once you have a lot of things combined and you have enough confluence, then you could say, hey, look, things are looking very bullish. Things are looking very bearish. I want to increase my risk. I want to put more in. I want to take more out, etc., etc. And that is what we're building with this master indicator. So now what we'll do is get a fresh chart for ETH, to be honest. Do we have a crypto? Is this the crypto index? Is this like the longest chart for Ethereum? What I'm gonna do is, screw it. I might as well do it. I might as well do the same thing for ETH. Top to top. What I'm gonna do is I'm gonna type it into Claude. I'm gonna say, can you get all of this data, but for Ethereum, and we will see what Claude says, right? And then of course we will have to use 50-week moving average, I believe, 2 weekly closes. I believe the 50-week moving average, let me go back here, to be honest. I believe it was actually one of the indicators. Let me just do this. And then I'll double click that. Type in 50. Okay. So yeah, the thing is, yeah, as soon as we crossed the 50-week moving average to the downside, that is basically cementing. It's cementing the bear market. But that happened in November, right? But the bearish market structure break on the weekly time frame happened for Ethereum. It happened in September. And even for Bitcoin, you could argue that this right here was a weekly bearish market structure break for Bitcoin as well in August, right? I look at Ethereum and I use Ethereum more than Bitcoin because Ethereum represents the altcoin market way better than Bitcoin does. But yeah, this is basically the nail in the coffin. As soon as this happened right here, we got this close underneath the 50-week moving average. That was the signal. Get the heck out. Get out of everything. Thank God I got out. I literally got out right there. I remember I said I sold everything in September, right around here. And then I ended up buying back because I was I got caught up. And then I ended up selling everything right here at this, literally right there, like crazy. Because once this happened, I was like, there's no justifying it anymore. There's no justifying it. There really isn't. It's done. I mean, look at last cycle as well. You know, we were above the 50-week MA up until right here, and it's like once this happened, yeah, we got a little bit of a rebound, but it was over. It was over at that point. And then it's like, you know, if you didn't get out there, then once we fell down here, it's like, okay, we get out on a rebound because it's done. And I'm pretty sure it happened as well. Like, I mean, we were already pretty deep into it back here, to be honest. But well, actually, let me see if I can get the index. This might be better, potentially. We'll see. We'll see. We were, yeah. Oh, so this was even back here. It's like this was the drop, and it's like that cemented it. So the 50-week MA is for sure one of the actually it is one of the metrics that I'm using in this master indicator, but that's for another episode. That's going to be in another episode. It's not there yet. Right now, we're just starting to time the market cycles because that gives you the best understanding from the most broadest perspective, right? So yeah, we got that. And let's see what Ethereum said or what ChatGPT said about Ethereum. So I'm gonna copy and paste. I wonder how I could do this. So give me a like you can see there's sort of a lot here. So it says Ethereum only had two complete cycles because it launched in 2015. But here's the full picture. All right, so top to top, um, yeah, 2018. Cycle one was 2018. Cycle two was 2021. Cycle three was 2025. Ethereum cycle bottoms 2018, 2022. Top to top duration. Oh, okay, I see. This is what I want. Top to top duration. So January 2018 to November 9th, 2021, 1,396 days for Ethereum. Cycle two, November 9th, 2021, that was the top, to August 24th, 2020. Wow, did Ethereum actually top in August of 2025 and not, let me double check this because I'm pretty sure Ethereum, wow, look, Ethereum, Ethereum is so bad. It's so bad. In August. Okay, so yeah, August 18th. Yeah, that's when it did. So August, um, top to top. August. They say August 24th, but basically, same amount of days for top to top. So let's say same. So what's the average full cycle summary? Let me copy this. Let me see if I could copy this. Uh, I think what I'll do is I'll copy this and then I will hold on a second. It's so long. Okay, this is what I'm gonna do. I'm gonna copy this and paste this into here. Index. Copy. Copy image. Paste image. And also let me save this as I don't know, I guess I'll save it as screen. Seems fine. So here we go. We have these right here. Wow, this is too much, too big. So we have all of these, and then I will get the actual summary. Get the summary down. Let me go back over here. Let me go back over here real quick. Copy image, and then I'll paste it into here. All right, so this is the breakdown for the Ethereum cycle, right? So we have top to top, 1,396 days for cycle one, 1,384 days for cycle two. So the average is 1,390 days. So top to top, if that's, you know, if that's correct, we'll just double check. You know, it's always important to double check your work. Yeah, okay. So we got that, and then we got top to top or here to here, 1,384, and this is the week. This is the weekly chart. So all right, so yeah, so the average is 1,390 days top to top. So let's go to the daily time frame, and let's look 1,390 days. If that was the top, 1,390 days would be 1,000. It's not gonna have enough data to be able to do this. I doubt it. Oh wait, it does. Oh no, it won't. 90. Here we go. Oh, whatever. Close enough. So we'll do 3-day charts. Here we go. And that comes up as June 12th, 2029. Top to top. I think it's stupid to be shorting right now. Yeah, it's stupid to be shorting. I would not be a short in a short position at all. I would rather be long right now than short. Shorting at the worst possible, at almost the worst possible time. It looks like it wants to go up. It looks like it actually wants to go all the way back up to at least like, I don't know, 2,500 minimum. But yeah, we got the top to top. So this is when the top to top. Okay, so let's look at bottom to bottom. Bottom to bottom, 1,281 days. So where was the bottom? Last cycle bottom is right here. 1,281. 1,281. What did it do? So the bottom should be, wow, it's coming up. 1,200. What? Hold on a second. Did I get that right? 1,281. Hold on a second. Bottom to bottom. This was the bottom, and then this was the bottom. 1,281 approximately. So from, is it already, it already surpassed. It already surpassed. Oh my God. It already surpassed the bottom from bottom to bottom. That's sort of crazy. Yeah, it's actually sort of crazy. What does it say about Ethereum? It says Ethereum cycles are slightly shorter, which makes sense since ETH typically peaks after Bitcoin and bottoms before BTC in each cycle. ETH crashes are faster but harder. 279 days versus 383 for Bitcoin, with deeper drawdowns. Ethereum recoveries are similar in duration, around 1,100 days. The diminishing return patterns are even more dramatic in Ethereum, from plus 5,499% down to plus 462%. Note, ETH's cycle 3 top around 4,953 barely broke its cycle 2 top, 4,815. Only about 2.9% increase. Not 100% certain that this is the final top for this cycle, but sources treating it as the all-time high. That's a much weaker performance relative to BTC, which went from 69K to 126K, which is around an 83% increase from top to top. Yeah, very true. All right, so bottom to bottom doesn't really work. What about top to bottom? Around 279 days. 279 days for Ethereum. Top 279 days. Where does that put us? That puts us around May. 279 days. All right, so top to bottom average 279 days. All right, top to bottom average is that. But 300 cycle 2, 221. Let's do 221 days. Let's do 221 first. This is what I'm going to do for this one. I'm going to do this. April 1st. So April 1st, cycle 2, top to bottom, number of days. So April 1st, 2026 is how long is the same amount of days that it took to go from top to bottom for the previous cycle. So here's the top and here's the bottom, 200, basically 222 days, 221 days. All right. So that's the top to bottom of that cycle. And then for the first cycle, cycle 1, it took 336 days. So let me go over here and do 336. So there you go. I'll copy paste. Okay. That is, what is this? This is July 26th. And that is the cycle 1. Okay. Cycle 1, top to bottom number of days. So where would be, knowing this information, just on the number of days, where, yeah, we are in cycle 3 for ETH. Where would be a good time to buy Ethereum potentially, given this information? It would be between here and here. This would be the time to buy would technically be, if you're only using time, and I'm not saying only using time, because the reason I'm creating this master indicator is because I want to have multiple different things that I look at. And next episode, we will look at the max drawdowns and we'll add that to the mix. Okay. But right now we're just looking at the time. And so we'll look at the max drawdowns and we'll look at the ROI from the bottom for next episode. But yeah, this would be the best time to buy in between April 1st and July 25th, 2026 for Ethereum, based off of this top to bottoms crashes. Okay. Somewhere between 80, and if it gets down below 80%, if it drops down below 80%. So let's see. It's only, it dropped down 63%. So, but maybe 70. I would say maybe you don't want to wait for it because maybe it won't go down 80%. Maybe it'll only go down 70%. Who knows? But and I think it's going to go down. I think it's going to go down to like, I think it's going to bottom somewhere around like $1,350 and $1,400. I think that's where Ethereum is going to bottom. I think it's probably going to bottom somewhere around there. So yeah, like that's just, I mean, because I'll also include this in the master indicator as in another session, not necessarily this one, but if you look, let's give you a hint, look at this, look at what has happened every time it's reached this area, bounced, pretty good, resistance, it turns into support, right? Just saying. So we'll build on top of this. Time. First, we're doing the time, then we'll do the drawdown, and then we'll do the support and resistance, and then we'll do maybe MVRBZ score, maybe another score, another indicator, and we'll just keep on going. We'll just keep on adding more and more on top, and eventually, we will be able to. I'll have this as some type of data dashboard. People could subscribe to it, and if they want, they'll get the data with the alerts and things like that. And I mean, you've already seen how powerful this can be, and this is just one. This is literally just one thing that we went over today, which is the amount of time that it takes for the cycles to go from bottoms to bottoms, tops to tops, tops to bottoms, and bottoms to tops. And you've seen how accurate that was. So imagine if you have that along with all of these other metrics that you don't just measure, but you have alerts for as well. Because it's not just about like measuring things, because you know, I'm an analyst, right? I've been analyzing markets for over 8 years. And what I've learned is that like I can analyze to my heart's content and my analysis is usually correct. But if I'm not paying attention, if I don't get an actual alert when the time comes, like my analysis was for nothing, right? So that's why it's going to be so important to either create the alerts yourself or to sign up for the master indicator whenever it comes out. If it's going to take a long time to be honest, because this is like I want this to be like a 9-figure type of business thing. But like so it's going to be it's going to be created, but it's going to take a while. But like you need to have the alerts set, and then the other thing is like literally like getting yourself to buy and sell is also a really big thing. And so the what I've noticed is that as you can take your emotions out of it, the more you can take your emotions out of the your trading, if you do a good analysis, then the better you typically will do, right? Because I mean, I did my analysis for Bitcoin, right? Like uh, years ago, that basically showed me like, hey, look, like this is the area right here. This is the area where you want to be selling. Like like I've known that this was the area where I want to be selling for the past 4 years, right? And I sold, but then I bought back, right? A little bit, and then I ended up selling again. I sold there. So like not that big of a deal, right? It's like but like having the ability to sell or to buy when everyone is oh no you're stupid, oh no it's going higher, oh no it's higher, and then to buy back here when it's like everyone is like oh no it's just a little rally, it's just a little rally and it's going to go lower, it's going to go back down, it's going to zero, blah 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 blah. That is like hard part. It's the analysis is pretty easy. Like it doesn't take a genius to do what I'm doing right now, right? Like you could press the buttons. You could press this button right here, and you could drag it from the bottom to the top and write it down. You could do that. Anyone can really do that. But to be able to actually put the trades on, that's the difficult thing. I will say this though, there is the thing that is difficult is what I talked about earlier in the stream, which is putting two and two together, which is finding like those altcoins that do have the opportunity to pop off and do very, very well. That requires a massive amount of time, massive amount of knowledge and stuff like that, right? But this stuff, most analysis is pretty easy. But actually following through with it, that's the hard part, right? And so anyway, what am I saying? Okay, so I want to answer a couple things. A couple things. First off, yeah, like it said that we're in cycle 3 for ETH. Also soon, but not yet. Well, that's what this says. That's what this analysis of the market cycle chart says, right? It says at least for Bitcoin, it says somewhere around September, October. It says for Ethereum, somewhere around April, May, June, July. That's what this says. But remember, you can't. It's important to not just use one metric. I mean, technically, you can, but it's much better to use multiple metrics for your analysis. Because one metric might not be right every single time, right? Now, granted, you're probably going to do very well if you buy during this time and you just wait and you just hold and you play the market cycles. That you're probably going to do better than most, to be honest. But you should have like having more metrics to be able to put it all together and create more confluence. That's what really creates amazing trades. So yeah. And then we can say, what's a couple more questions we have? Can we assume that Ethereum bottom cycle 3 represents the bottom for other big market alts? It will for some, and this sort of goes back to what I was talking about, where it really requires that is where you should if you're not up to date with stuff, paying for knowledge is a good idea because paying for knowledge with people who are in it, who are literally nonstop, 24/7, like in it, like who know what they're talking about, that's going to give you an edge because you can't just say, "Oh, hey, look, Ethereum reached its bottom, right around right over here. Uh, so now Ethereum is down here, and it's within the zone, it's within the time zone. So I'm going to buy whatever coin. I'm going to buy AVAX. I'm gonna buy um, something like I don't know, ADA, Cardano, Link. What you have to do is you have to look at those charts as well to see like where they are. And then and then you have to think about it like from their charts. You have to look at their charts, and also you have to look at it from a fundamental perspective. From a fundamental perspective, I think that when ETH bottoms right around when if ETH does happen to bottom somewhere around here, where I talked about, I think maybe another major altcoin is Stewie. I think Stewie has a good opportunity to move up along with ETH. I think some of them will, but what you can do is you can look at the charts um, against Ethereum. So, for instance, you have SUI USDT against Ethereum USDT, and that crosses out the denominators, and it makes it SUI against Ethereum, and that's what this chart is, right? So if at that time, let's say May, June, July, somewhere, that's where Ethereum is supposed to bottom is May, June, July, right? Let's say that this chart is, is down here, is somewhere down here. Well, maybe this, you know, maybe that would be a good time to buy some SUI over over Ethereum, because SUI would be at the very bottom. It would be at a major support. So why not? That's something that you could say, right? But to just blindly buy it, blindly buy an altcoin during that time, it doesn't always work out, to be honest. It doesn't always work out. Um, I used that strategy, I used that quote unquote strategy to buy certain alts in 2022 and 2023. And it didn't really work out. And what I wish I did instead is instead of just blindly buying the altcoins because I thought originally, oh, everything was going to go up like most noobs, until I realized, oh no, that's not the way it's working anymore, and I changed my strategy. Um, when I thought that in 2022, I did buy, for instance, like Polkadot. I bought that, and that just sucked compared to Bitcoin and Ethereum and a lot of other coins, right? So I wouldn't say blindly buy any big alts even at the bottom. I would say think about what I talked about earlier. What happens with market cycles? Bitcoin comes first. Bitcoin comes first, then comes typically Ethereum, then comes altcoins. The last cycle, if you were paying attention, like I saw that a lot of that stuff was skipped, and a lot of the stuff that was popping off was on hot wallets, on decentralized exchanges. So the best thing to do was to skip all of that and just go straight to the decentralized exchanges and buy the coins that are super low market cap, like brand new coins on those things. But that requires a lot of understanding of the markets and where the money was flowing to, and like a whole bunch of stuff. Um, So I would say it would be more prudent to just buy Bitcoin at the lows and then just wait unless you're really really in it, you know, um, and and then you do your own analysis, or like I have a mastermind. It's called Crypto Leads. I'll put it in the description, but like it's expensive. It is expensive because I literally spend my whole life doing this, right? But like what I'm saying is most people are probably better off buying Bitcoin at the bottom and maybe messing around with some alts and you know selling them while it goes up and then going back into Bitcoin, or maybe just straight up sticking with Bitcoin. And that's the Benjamin Cohen style, right? That's the Benjamin Cohen thing. He's like just buy Bitcoin. Your alts, like most alts, underperform Bitcoin, whatever, right? But like I said, I like to look for those plays that have that asymmetric reward. During the phases of the market cycle where they come in handy, where it's more likely to happen, and then push 5%, 10%, 20%, 30% of my portfolio, 50% of my portfolio sometimes, depending on the timing and my conviction into those. I've been listening to a lot of Stan Druckenmiller lately, and how he talks about how he really likes to wait until a lot of things click and he gets super super into a trade that makes a lot of sense for him, and he'll go in massive into that trade, massively heavy. And he'll monitor it, and if he's wrong, he'll pull out immediately within a day or two. It doesn't matter, but he's typically right. And when he's right, after he does his more analysis into it and more research, he'll put even more in. I'm not that crazy, but like because this is crypto, so you have to use you can't go all in on a meme coin, right? You can't go all in on a $5 million altcoin, right? You have to use better risk management than that. But I'm willing to risk 5% of my portfolio or even 10% of my portfolio on one trade. And if I just don't think I'm ever going to see another trade as monumental and as easy, such a layup as what Dogecoin was in 2020. And a trade that I did put 100% of my capital into. Um, you know, but I just don't know if I'm ever going to see another trade that's easy as that. But if I do see one as easy as that, and it's just everything clicks and everything makes sense, then yeah, I'll put 100%. Anyway, back to uh, anyway, sorry. What was rude, bro? Sorry if I was rude in any way, but let me look. I'm looking at Chris's thing, right? Big Life Project sold 80% to fund it the last few months. Should I wait for a short-term pump to sell the last 20%? My plan is in 5 to 6 months to be back in free cash flow and able to invest again. Wait, what? My plan is in 5 to 6 months to be back back in free cash flow and able to get. Well, I mean, in 5 to 6 months, the bottom is probably going to be in 5 to 6 months already. So if you're dollar cost averaging, you want to be dollar cost averaging in while the market is going down, right? Like that's the other thing that people say. It's like, oh, dollar cost average, dollar cost average, dollar cost average. But like, dude, like let me go to this chart over here. The worst possible time to dollar cost average is literally here. This is the worst possible time to dollar cost average. You know when the best time to dollar cost average is? The best time to dollar cost average is here, like this entire during while it's going down. Because if you dollar cost average while it's going down, you lower your average buy price, and then eventually it's better to just go all in somewhere around here, right? Just go all in at the like somewhere close to the bottom and just wait. That's better. So hopefully you could get some free cash flow in less than 5 or 6 months, and then just dollar cost average in, or um, sell on a bounce and just like make money. Yeah, make money, make money, make money, and then buy whenever you think the low is in, whether that be somewhere around September, October, or maybe even May. You know, we do have huge rallies during bear markets, right? And like I've mentioned before in the stream, just because this right here is the main thing that is like the underlying thing that I'm looking at that I'm using for my analysis, it doesn't mean that it necessarily has to perform exactly like this, right? The market doesn't have to bottom in October of 2026. You know, there's a lot of other factors that I'm going to be looking at. Um, so we'll see, and that's actually why I'm gonna. This is why I'm gonna be having a lot of episodes up here. Um, and I think that's it. I think that's gonna be it. We did Bitcoin, we did Ethereum, and we got those down. So I'm going to basically see if I could program this into my dashboard and get it down so that there'll be alerts and stuff when the time comes. And yeah, it'll be really sick. So unless anyone has any other questions, uh, I'll end it here. Give you a couple seconds. All right. All right. I think we're good. Thank you so much for watching, and I'll see y'all in the next one. Later.